Hi everybody, I'm sergiok.kilembe from Trading Wall Street TV, and thanks for joining me for this week US market weekly reports. Okay, and without further ado, let's begin. Let's going straight to the Dow Jones Industrial Average. As you can see here, we have another spinning top type of doji candle over here. That's another indecision week. We are moving sideways, still in those all-time highs, and the probabilities for next week, if we trade lower below the 8 weeks moving average, we may go back to 18,000 points, a past resistance for 2 times, and now a support over here. You can see here the trend line, and that's the trend line support as well. But notice something a little bit more special for this week. We have a convergence between the 4 weeks moving average and the 8 week moving average. So if you look in the past, historically, you can see that when the 4 weeks moving average crosses below the 8 week moving average, markets tend to fall off. So maybe this time history can repeat itself, as you can see over here, but not for a long period of time, just 2 weeks, but 2 weeks of a fall off, that's a fall off, so you can profit from that. So be careful, keep that in mind, and look at it closely, So here we have it. Okay, I'm gonna save that now. Okay, let's continue. The diamonds, same pattern over here, indecision week, but here we have a bearish engulfing candle, because that candle over here engulfs the previous one, this spinning top type of doji candle over here in the all-time highs also. So that's a great signal for a bearish sentiment. So next week maybe a bearish week, and the week after also. But same type of stuff over here between these two moving averages, the 4 week moving averages, convergence with the 8 week moving averages. That's a squeeze in the volume, and if like we saw earlier, if it crosses below the 4 weeks moving average, if that moving average crosses below the 8 week moving average, so that's a bearish signal. Also, you can see over here we have a gap, and when you look closer at the volume is close to nothing, but it's the selling volume, it's reaching the average. So pay close attention. And also, if you see this week, we opened the week with a huge gap. So let's quickly take a quick look at the daily charts. Let's magnify it a little bit, and as you can see over here, you see gaps, you see another gap, you see another gap. That's a type of aisle formation, but that this aisle with rejection, and then boom, it goes back lower, range movements, and trying to go back, rejected it, boom, gap down. Now this type of dragonfly doji over here, indecision, and next we're gonna see what's gonna happen, But back over here at our weekly charts, because I only trade on weekly charts, because it's less chaos, it's less chaotic for me, and the resistance and the support level are more defined, so it's more clear for me, when I'm looking at my charting, to spot, or enter and entering points, stop losses, and take profits, limit points. But it's more clear for me. I'm more of a longer term type of trader and investor, so that's the reason why, so that's it. Okay, now let me save it quickly. Now let's continue. Now we're gonna have a look at the Nasdaq Composite. The Nasdaq Composite over here, this type of doji over here, clearly an indecision. It's a bearish doji. We are still above the 4 weeks moving averages, but as you can see over here, we reached we are at the top over here, all-time highs, and now you see the volume, selling volume close to the average. And now we also see over here a convergence between these two moving averages, the 4 and the 8 weeks moving averages. So be careful. Probabilities for next week, sideways movements for at least 1 or 2 weeks. The time for these moving averages to converge and to reach the 4 weeks moving averages, and then we can see, you know, as you can see over here, bang, over here, bang. I repeat, if the 4 weeks moving averages crosses below the 8 week moving averages, it's a sell-off, great sell-off signal. So pay close attention to those levels over here. Now the Nasdaq 100, excuse me, here, the Nasdaq 100 NDX, same scenario over here, but here you can see these the bullish sentiment, this bullish channel. We are here at the channel's resistance, doji, and now a bearish doji. So maybe it's a signal of a good evening type of pattern, you know. So a good evening type of pattern. If it crosses below, if next week maybe we're gonna open at those levels, 48, 80, something like that, and if we start to sell off in direction of these, of the 8 weeks moving average zone over here at 46.65, so then you already know that a sell-off is possible, you know. It's gonna be more healthy for the markets to come back and retest this zone over here that's past resistance for 1 and 2 times. Now a support over here at the 45.20 in the region of the 21 weeks moving average, and maybe come lower. Let me extend this, so maybe come here at this level. So let me draw quickly an arrow over here. So it's gonna be, maybe market's gonna do this, boom, and then bounce over here and then go back higher, you know, like that. But we don't know, the probabilities are, it is what it is, and then maybe we can have something like this maybe. So over here also, if you have a sell-off, never forget that things happen, all things happen, no, in the markets. No, it's not always green. When comes the red ones, then they come in and they hit hard. So be prepared, you know. You have to be prepared for everything, you know. We are fund managers, we are managing risk. So when it's risk involved, anything can happen. So you have to be prepared. If not prepared, there's when you're losing money, and you don't want to lose money. So preserve your capital preservation, it's rule number 1, and then managing the risk, and then the gains, let them take care of themselves, you know, but you monitor them. So that's it. Okay, let's proceed now. Let's have a look at the Qs, the QQQ. Okay, over here we have the doji, bearish doji over here above the 4 weeks moving averages in the all-time highs. But over here we have something a little bit more curious. Now you see this candle over here. Also we are in a perfect inside wick candle. If we do this, we have something interesting like that. Okay, so you can see over here we have this, but this candle over here, maybe next week we can open in the same region, trying to go higher to that level. And if here at that level, so you can see here that we call that a bullish trap. We open over here, the max trapping all the buyers over here, fake out over the resistance over here, and then we come and close lower. Following week sideways movement, following week sideways movement, plus a indecision. So if next week we have the same type of candle, that's a great bearish signal, and it's called a tweezer top. You know, long shadows over here at resistance. That's a clear message of rejection of higher prices. We reject the 118 and the 120, and then boom, sell off. So over here, maybe what we can see if you start trading lower is this, and coming back to retest those levels. Also, you can see over here we have a gap, so bam, like that. So these are my perspective and my vision and the probabilities, you know, for next week. So keep that in mind. Okay, so don't forget, pay close attention at these levels. We are at critical levels. It's critical resistance level, all-time highs. So you need to be focused and cautious and ready for whatever, you know. Now let's have a look at the S&P 500s. First, you know me, I always like to begin with the sectors map, so we can have a better look at what's happening, you know, in the market. You see the financials, great week for the financials. The consumer goods, great week for Apple. The beverage, not so good. Other industries, goods. Here in industrial goods, a great week. Negative just for no, but not negative, but good for GE. Negative for DHR, closely minus 1%. Over here, aerospace. This is this particular industry is doing fine. Industrial goods, but here, waste management and for those not so good. Here the utilities, bad week for utilities. Healthcare, it's kind of mixed week, you know. Great loser over here, J&J, Johnson & Johnson, minus 2.68%, and healthcare, bad week. Medical appliance, bad week. Basic materials, great week for all the oil and gas producers and refineries and companies, was good. Bad week only for ExxonMobil, and CVX had a good week. Services, you know, companies type entertainment, Disney, bad week. Walmart, excuse me, bad week, and Amazon, bad week. Here, Home Depot, bad week. McDonald's, a very bad week. The railroads and the other industries are doing fine. And here, technology, finally, Google and Facebook, tiny loss of 1%. But the technology and telecom services, that particular industry, you see here, great loser, AT&T, and another one, Verizon. So that's it for the sectors map. Now let's move on. Here on the S&P 500's graphs, now charts, all-time highs. Another dragonfly doji over here. 2 consecutive weeks, no, or close to 4 weeks of indecision. We're going nowhere. We're still above the 4 weeks moving averages. You see a convergence over here between the 4 weeks moving averages and the 8-week moving averages. So I repeat, I'm going to repeat that. If we go lower, we're going to come back over here to retest that past resistance 1, 2, and 3 times over here. Yeah, you know, 1, 2, 3. Now it's a support over here close to the 2100s. Okay, let's proceed. Now we're going to have a look at the SPY, the spiders, the ETF. Same thing over here. Indecision. You see the convergence between the 4 weeks moving averages and the 8-week moving averages. If we go below, we're going to retest this level over here, you know, past resistance, 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 and now support over here close to the $210. Okay, now let's have a look at the VIX volatility index, still in the lows, consolidation over here between, well, at the 10, right. Now we are slightly below the 4 weeks moving averages, but you can see here a convergence, you know, between the 8 and the 4 weeks moving averages. So maybe it's gonna try to go higher towards the 40s, 14, excuse me, over here, 14 points. You can clearly see here those spikes sending us messages to be careful, because sell-off, it's possible, you know, a quick one, you know, just for 1 week. So if the VIX started to go bullish, you already know that you have to try to look for shorting opportunities in the market. Okay, so that's it. So now let's move on. Let's have a look at the Russell 2000. Okay, here Russell 2000. Over here, what do we have? A type of doji, well, not doji, but a spinning top over here. Not a great week, a bullish week, but we are slightly over next week's negotiations, and we can clearly see here a gap. So let's have a quick look here. We see the gap over here. Bam, that gap was filled and then trying to go higher. And if you look at the daily, you see the stairs pattern, you know. So we're gonna move higher here. I'm gonna see if it goes below the 1240, 1245, then the 1250 can be a great level. So over here above the 1250, and then boom, go higher to the 1280, 1290. But we are looking for confirmations, and also over here you see this gap. So if we sell off, we can come back over here to fill this gap right around the 1175, and then bounce back. You can see here this the trend line. You can bounce back here and then boom, go higher. It's gonna be more healthy. Okay, now let's have a look at the IWM iShares Russell 2000 ETF. Same type of pattern, you know, indecision, low volume, low buyers volume, indecision, kind of moving sideways, and same type of thing, you know. You have a gap over here. So if we trade lower, we're gonna come back, fill this gap, bounce over here at the trend line support, and then boom, go back towards the $123. And then if we break above the 124, yeah, we're gonna go back higher towards the all-time highs of $128. Now let's have a look at the bond markets rapidly. First of all, the treasury notes, the 10-year treasury notes here, US 10-year treasury notes. Let's have a look at the yields. So what's happening? You see bearish sentiments, bullish rejection, bearish rejection, bullish rejection, inside week candle for 1, 2, 3, 4, 5 weeks. You can see here this triangle, an ascendant one. Here we have the resistance, and it's creating like lower highs, you know, each time a lower high, a lower high, lower high, lower high, and then over here we're waiting, maybe it's gonna break higher and break also this trend line resistance or break lower to break this trend line supports over here and go back over there. So the yield now it is at 1.57%. Okay, directly let's have a look at the TY, the TY, excuse me. The TY is the US 10-year Treasury note CFD, a tradable CFD, and it's the complete opposite. You know, you have this triangle over here. You can see this bullish channel, the fifth week in the inside week candle of that particular bearish candle over here. If we break below, bam, that support, we're gonna go lower towards the 130, and if we break higher over here towards the highs of 133, 134. Okay, but you can see it's creating higher lows, higher low, higher low, higher low over here. It's a clear sideways movement, inside week type of pattern during 5 week. Now let's have a look at the 30-year Treasury bonds yield first. Okay, with the yield, sorry, excuse me, the mouse is not working. You can see here inside week candle, you see the bullish here, rejection, rejection, another rejection here, reversal, and now a rejection, a bullish. We reject the past bearish candle, but now we are in a inside week candle, so we're waiting for confirmation. Now if we go above, boom, we're gonna go back and fill this gap over here around the 2.5% to 2.4%. We target 2.5%, or if we go lower, we're gonna go back to the 2.1% in the yield. Now let's have a look at the tradable CFD for the Treasury. Here we have for the US T-bonds, 30-year T-bond, and we can see the higher lows over here, inside week candle, fifth week. Here we have the support over here. We have this gap. It was not filled, but we have a long shadow over here. You start to see shadows, so maybe next week we can start to trade lower and go back towards the 21-week moving average over here at 168, 169 first of all. But we see here that we had a convergence between the 4 weeks moving average and the 8-week moving average, and the 4-week moving average is already below the 8-week moving average, so that's a bearish signal. So the targets 166 over here, that passed resistance for 1, 2, and 3 times, and now it supports. Okay, we're done with the bond markets. Now let's have a look at the US dollar future, US dollar index in the futures. The dollar is trading lower, small gap over here, bearish gap. You see here we break below the support trend line, the trend line support, that bullish channel. Break below the support level, and now boom, we are going back towards the 94 and 93 and maybe 92. But take a look over here, a cross between the 4 weeks and the 8-week moving average already happened, and what we're looking now, the 4-week moving average is going to cross below the 21 moving average. So the bearish sentiment is going to be it's going to go lower even more faster, you know. So I'm very bearish on the US dollar. So for those of you guys who are trading forex, starting to short the US dollar is a good option. It's a good option, you know. So you can see here it's forming a stairs pattern, you know. We're going down, a step, going down, maybe here over here another step, because we have support over here, maybe like for 1 or 2 weeks, and then boom, another break. So we have to pay close attention to what the Fed's gonna do, you know, because I know that on the fundamental level it has to do with that, you know. So take a look at what the Fed is gonna do. We're gonna have like I think some speeches this week, not a Jelen speak, but you know, from the Fed, of the Chicago's Fed, you know. We're gonna have some speeches, so pay attention to that. It's gonna be maybe the catalyst, not that, but the hike of the hike or not hike of September. So pay close attention. Okay, now let's have a look at the commodities. First of all, we're gonna start with oil, and the crude oil first. And okay, you see our pattern, you know, our pattern of last week, the inverted head and shoulders. We are here in the right shoulder, close to the neckline. 2 bullish week, back-to-back bullish candles over here. Now we are at the resistance level of 49.50, pretty close to the $50 a barrel level. So if we have another bullish week, it's going to be great, and oil is going to target first of all the $52 a barrel, you know, for the WTI crude oil. Okay, now let's have a look at the LCO, the Brent oil. Same pattern, same scenario, 2 back-to-back bullish candles. This one is a strong one, so a bullish power candle. So we are coming with conviction, with determination on the buy side. So now we are here at the $50 a barrel. That's our resistance. We already broke above, you see here, the break above this trend line over here, that resistance. So now I'm looking for a confirmation. We have that critical zone here between 50 and 54, and if you can trade below above 54 or 55, then you're gonna go back to the 65, 60 first, and then $65 a barrel for the Brent oil. Now let's have a look at gold. Precious metals, commodity, COMEX, gold, and gold still in this triangle, and that's a bearish. I'm bearish, you know, on gold for the moment, because you see here the spikes trying to go above these the resistance over here, but we failed. Those are 3 consecutive bullish traps, and now maybe, and still here in this inside week candle, you know, here, that's an inside week candle for the 3rd consecutive week. And what I'm expecting is a sell-off in gold. And take a look, convergence between the 4 and the 8 weeks moving averages, and if the 4 weeks moving average goes below the 8 week moving averages, that's a bearish signal. And then we can first of all come back here. You see here, that's the trend line over here acting as a support, and you can clearly see here also at the level of the 21 weeks moving averages, that's a support level at $12.90 an ounce. That's a support level. So maybe we can come back here and bounce from here and then go higher, because you can see here the pattern, you know, boom, 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 boom. But here, be careful, we had a gap over here that was not filled, so we have to have this in mind. Okay, now silver. Okay, SL silver, same stuff, but silver, yeah, it's starting to sell off, and you can see here that tweezer top over here at the resistance level, a cross between the 4 weeks moving averages and the 8 week moving averages. And if we trade below, if we open over here and then we started to go below towards the trend line support level, then it's gonna accelerate, you know, the sell-off, and we're gonna come back over here towards the $18 an ounce for silver, and maybe go lower. But for the moment, the target is that particular past resistance, now support over here. You can clearly see the pattern, an ascending, a bullish step stairs pattern, you know, bam, a step, two step, you know, the third step, sell off, come back from here, and then boom, bounce. Okay, and now Bitcoin versus US dollar, the cryptocurrency. And here the same pattern, you know. Now we're moving sideways, no direction, no nothing, inside wicks, and you see over here that cross between the 4 weeks moving averages and the 8 week moving averages had already occurred, and now the 4 week moving averages is going after the 21 moving average. So if it comes and it crosses below, then we're gonna see this sell-off, because you know this particular bearish candle with this long tail below, it's a signal that let us know that markets, that the prices can go lower. That's a signal, you know. You see, boom, a signal over here and another one over here. So don't be surprised to see below 555, below 555, to go below towards the 455. Here you can see a past resistance, and with a long sideways range movement over here, you know. I'm gonna put that in evidence like that. Okay, you see here the support, and then boom, the ascendance triangle, and then here we are like this type of bearish flag. Okay, that's it for the graphs, and now we're gonna close with the economic calendar and what's happening in the US. You know, on Monday at 2:30, Chicago Fed National Activity Index, but nothing of great importance. Next for the US at 5:30, the 3-month bill auction, nothing of great importance. Next on Tuesday, what do we have in Tuesday? Something in Germany, and bam bam bam. Here at 4 p.m. we have the US new home sales from July. Wednesday, what do we have on Wednesday in the US? At 4 p.m. US existing home sales from July, and then some other stuffs. And here on Thursday in the US, what do we have in the US? Yeah, at 2:30 p.m. we have durable goods orders month on month from July. And then on Friday in the US, nothing yet. At 2:30 p.m. in the US, we have the GDP growth rates quarter on quarter, second estimation from the second quarter, yeah. And then, but we have at 4 p.m. Michigan consumer sentiment, and then on Friday at 5 p.m. US Fed Janet Yellen speech. But you have to pay close attention. So the issue of the speech, maybe it's gonna trigger another sell-off in the US dollar index, in the US dollar currency all around the world, you know, or for those who trade the forex, and maybe the market's gonna react, but slightly. So pay close attention to the speech. It is not of great importance, but you know, investors and people and all the operators in the markets react to that. Okay, so thank you everybody. Have a great week, a great trading week, and see you next week. Okay, thank you, bye.